Hi, I'm Sarvesh, and in this video you would see on analysis. Suppose before buying a stock, we should analyze it in some way or the other. And two basic ways of analysis are technical and fundamental analysis. Now I'll give an example. Suppose we are a tourist and we have gone to a foreign country and we want to have a dinner on the street food. And there are hundreds of shops and we have to choose some shops from that. And one thing what you could do is you could select any 5 or 6 shops and check whether the what ingredients they use, what are the products they give to eat, and what are their quality of food, and those things. And you could check these shops and select any few shops whatever you like and eat there. The other way is you could just go have a look on 100 shops and you could find where a large number of crowd is going over there, and you could decide you could taste foods from some shops with large some number of crowds like those. And if you take the first example what I gave is similar to fundamental, and the second one what I gave we could consider it similar to technical. In fundamental you'd analyze a few stocks much deeper about the company, but in technical you would just have an overview of several companies and we could decide based on those. Now, technical analysis is mainly used for short term trades, and we could develop an entry and exit point using technical analysis for any stocks what we want to buy. And we could also visualize the movements of prices depending on the market participants and from charts. Actually, we use charts for technical analysis, and in chart price patterns are formed in charts, and we use those patterns to identify any trading opportunities available. And some things we assume in technical analysis so that it is assumed to be a good analysis. What are those is markets discount everything, which means markets tells us everything. How much quantities are being bought and how much price is moving and all. In fundamental, we can't say who is buying those stocks and how much they are buying and all. But in technical analysis, we couldn't say who's buying, but we could say how much amount is being bought, and we could predict whether some insiders or some large investors are buying those shares. And technical, we use how more than why. We don't consider why the prices is moving. We just see how the prices are moving on charts, and we also assume that price moves in a trend so that we could buy it and utilize the trend to make some money. And also the other assumption is history tends to repeat itself. That means like human emotions doesn't changes with the matter of time, it remains same. And so the emotions of humans are displayed through charts, and so we could say the patterns also remain same over the time. So we could use these patterns to make analysis and take entry and exit. And another advantage of this is you could use it across several asset classes. It's not limited to only stocks or something like that. You could use that for stocks, shares, or else something like cryptos or commodities like gold, silver, etc. But if you see fundamental, the analysis are different for different asset classes. Now, if we see fundamental, it's generally used for long term. In this, we study about certain companies and we can separate some good companies from a very bad companies. This is we couldn't do that in technical. From seeing charts, we can't say whether it's a good company or a bad company. And we could understand the various models of companies' businesses. And for fundamental analysis, some basic skills are you have to analyze some basic financial statements like company's balance sheet, profit and loss statement, cash flow. It's not very complicated, it's very simple. You just have to have some fourth or fifth standard max knowledge. That's simple. And we should analyze about the business about what industry and what sector it is, and whether its sector is booming or not, and those things. And mathematics is quite simple, and some people think fundamental analysis are quite difficult and you should have some advanced knowledge in like CA, like those things, and it's not required. Everyone can do both fundamental and technical as well. And some tools we use for company fundamental analysis are annual report. The company's annual report, which the company releases publicly on their website. If they are listed in stock market, they should release it compulsorily. And you could also get industry related data about those industries, which industry the companies, and about their future and those things. And news is another major factor in fundamental analysis. Suppose some companies having some new investors coming in, that's a very positive news. And if we see companies directors are changing, it might be a positive or a negative. And those news is also are a very important factor. And another thing is MS Excel, which we could use for analyzing sales of each year or profits of the companies each year and all. And now there's a final question: which analysis is better, technical or fundamental? If you see, there is nothing called as best analysis. You could do what suits you, or if you want to do for short term, you could prefer technical. But if you prefer long term, you could prefer fundamental. But there is not limited to only long term fundamental and short term technical. You could use it anyway as you want, or you could use both in your analysis. And these are not only the two ways of analyzing the stocks. There are still several ways, like you could use some stats like previous data to analyze the price movements, or else you could use some emotions of humans for finding some shares and such things. But these are some fundamental two basic ways, and as we couldn't say anything as best. Everything has its own positives and negatives, and we could choose what suits us well. Thank you. That's it for this video. See you all in the next video.